Hello and welcome. It's the completion of the 7th day of August 2019. My name is Derek, and this is the Money Charts channel where, like always, all bets, trades, and of the like, within each his own risk and their own reward. Okay, price action is approaching this $1,522.5 level of Fibonacci retracement that I drew in. It seems as if it's going to be there very soon. Now, it is very, very unlikely for the price action to not get there amongst this run higher. Whether we'll have a retracement before it gets there, I would say less probable, but possible. Gold has broken out past this major level of resistance at 1321 that was pierced extra to about 1360. As it was hit back in 2016, it was tested in 2017, and 2018, and 2019. Every year it tested it once. And then, in the second, well, I guess every year it tested at least once, rather. In fact, even in 2015, it came close to that level. 2014, it had multiple tests there. And it almost looks like an inverted head and shoulders esque like. And for what it's worth and for its value in the break of the neckline, it already did that a long time ago. The break of the neckline was roughly around the high 13s, 1370, 1380. Clear, concise break has been in store. We can see all of the sideways consolidation that occurred from the start of the summer solstice, northern hemisphere, to July the 25th. That therefore is over a month time, and now over the last three days, over the last 9 trading days rather, the price action, I guess we can call it over the last 5 days even. Considering, I guess you could say this was the end of day 3, and this is the start of a new one, I suppose. But breaking it past this resistance in here, 1437. It had this attempt. It looked like it was going to do it on July the 18th, but no, failed breakout. Oftentimes, from a failed moves comes fast moves in the opposite direction. Not here. Although kind of, it did go to 1402. Although there was that failed breakdown that was a fast move higher, because the failed breakout was it got above the 18 average of highs like this after showing a good correctionary moves beforehand, and then instantly giving it back. But it successfully corrected after the failed move because it spent its entire time pretty much within the 18 that was rising, and then it escaped it. Exitation, as I'd now like to call it, of the 18, which of course this was. It's just it doesn't look like a failed breakout right now. And because of such, it does seem as if a Pierce Extra on the 1522, as I've been predicting for quite some time, should be in store for us maybe as early as tomorrow morning. It's only needs now a gain of $22 or 1.5%, and that's almost child's play these days. Getting above that, I have the next Fibonacci line at 1669. How that's calculated is I take a key high, which is this one here, and I look at the key low down in here. But I really have to go upon. This is one of the reasons why I like to use one of my theories in calculating upside. One of the ones, because that's what I'm going to go next on the whole ordeal, is I look for an up move, and I want a correction. So I need something that's more than legit. Obviously, there's no denying the fact that it had a good correction, and this one is in that case. There's no denying that it's had a good correction, but at the same point, I got to think that you're also denying that it didn't fill much of the empty space from point low to point high. It looks like it barely had a 38.2% retracement. So what I like to do to calculate upside is I want to see the up move, which was the case. I want to see the correctionary mode, which I'm seeing now. So on a break of resistance at 1920, what I'm going to do for math, I'm going to take the 1920 and divide it by these lows. And about 252 is the number that I came up with. So let me do this. So I'll do 1920 divided by 250 to the root, and the 61.8% down represents 0.382. So this divided by this to the root of 0.382, multiply the low of 252, and in my calculation with my calculator, I get 547. So that gets me to the point of how I'm going to do my next calculation. I'm going to take that 1920 high and divide it now by 547. I'm going to put it to the root of 1.618. That will give me the up target. And I'm going to multiply it again by the low. So 547 and 1920. Up target $4,172. And the way I look at it, it's to me it calculates the percentage move based on the point high, point low move. To me, the best from my research and all the charts that I've looked at throughout the years in doing this. So again, the head and shoulders pattern, left shoulder, like the headish, the right shoulder kind of dysfunctional or a double right shoulder because of this. Almost a double bottom in here. So the double bottom, which is like two U's or there's other things, body parts or other things you can decide to name it as. Just that pattern, it's bullish and it broke out above that resistance. And so now, if we don't find resistance in spots where we're supposed to, then we look for fast moves. So to me, as a mathematician or somebody who enjoys working with numbers, I realize breaking above here, it's this 1670 that's got the best chance of encountering that next level of resistance, and then probably piercing above, like close to maybe 1700, a bit above that even, like 1710 maybe, 1706. And then breaking above that barrier area, I'd be looking at previous high at about 1900. And the range level would be between 1785 and 1920. Getting above that, I mean, 4,000 is long term, so there's going to be many barriers all in the way there, although you never know with how fast these markets can move because we become into chartering new territories in the act of doing it. And right now, gold is already doing that in so many other countries. Canada's been over 2,000 today. Its high before was in the 1900s. Well, it's above that now. It's at all-time highs. The Australian dollar, it had these highs at 1839. Now it's at 22.16. It's at all-time highs. New Zealand, its all-time high before was 23.24, which is its price right now. 23.24. So intraday, it made its all-time high today at 22. No, it's 23.44. Barely, but still a new all-time high. Now the Turkish lira, on the other hand, it's not quite at all-time highs because that was August of last year when it got up to 281. But it's getting closer. But um, it was 166 in 1997, and then it was 18 here, and it's not quite at all-time highs. It's good because it was 281 here. Now the euro's getting close though. It's at 13.39 on the euro end. We have these highs here and at 1381, 1386 here. So 1386 and change. But it's getting closer. But not quite the Swiss franc. Japan, on the other hand, it's got this huge level of established resistance at about 150,000 yen. 150 to 158,000. And now we're sitting at 159 at all-time highs. The Indian rupee, 106,000, and its previous 2012, 2013 highs was at about 98. So it's now just making new all-time highs as well. Now against Litecoin, it's a different story. It used to cost 306 Litecoin, 330 even, 360 to buy an ounce of gold. Now you can do so with 16.45. Now I didn't buy an ounce of gold today, but this is the exchange that I would have used when I bought gold today. For I did such because I do feel gold is ready for a spectacular move coming soon, and the breakout signals, of course, are just coming through on the early stages of the breakout points on these technical charts. But see, I'm hoping that it's a losing decision. Meaning, I could have kept the Litecoin and just buy later. Meaning that I mean, if gold goes up to like 2,000, 2,400, 2,600, and that would be like the next key levels, like 24, 26. I guess the best I could do is use some shorter term calculations to figure out where that would be. I think it's too early for me to determine that because I need to see markets actually have those short term movements, meaning build resistance near 20,000. Or excuse me, for gold at 2,000. So for this one, 16.44. It was up here at 52, and it was as low as 3 3/4. So I'm hoping it was a bad decision. I could have kept the Litecoin and this goes down lower. I guess it's more for portfolio balance more than anything. Because even over that of silver, unless you're looking for the short term move, or you're in my position, you just okay, you got way your silver to gold ratio personally is way out of whack. So that's why I decided to buy gold. I'm hoping it was a bad decision on the ratio as well. I picked up 7 ounces of coins today, which isn't much. I mean, it's something, but compared to the gold, and I didn't get 7 ounces of gold. I didn't even get an ounce, albeit I got a good quantity. I think under an ounce of gold and 7 ounces of silver, and I'm doing so at a ratio of 87.5. For a lot of my plans is price action down towards this line at 33. That's minor distribution of silver and accumulation of gold for me. Minor as well, meaning I'll take a little bit of it, flip it over for gold. And in the event that it's a bottom and then price action has this ratio probably come back into like over 60. Over 60, I might look to flip it back. Even 67 probably. But I would want to go 33, 32 though. And again, that's just for minor trade. Below that, I mean, I start to see it hit close to like the high teen in the teenager years. So I guess the 16, 17, 18, 19. Then that would be moderate, medium distribution and accumulation. And then it would be aggressive in the single digits, 10 and below, especially at around 7 and 8. That would be aggressive because the ratios would be out of whack. And then if this is correct and ratios go anywhere near this one number, extreme hyper distribution of silver and hyper accumulation of gold, that's my long-term plan moving in. It's always going to be about adjusting to the message of the market, and especially with gold and silver, how it plays out for financial times. Because generally speaking, what a lot of it's going to be is when markets go up collectively, then you're going to turn your sell silver or gold into dollars. Yeah, maybe. For a lot of it is going to be used to cover inflationary costs and live deflationary life in an inflationary world where markets of real items go up 20, 30%. And you can overperform the markets because of even just precious metals over cryptos. But to me, precious metals is a more safer play that's got lower risk and lower reward by far over that of a cryptocurrency venture. And because my crypto ratios to precious metals was higher than it should have been, accumulating gold and silver to me was just getting my portfolio a little more tuned because I realized I could have bought silver instead with the ratio at 87 instead of getting like 7 ounces of silver. Well, I'd be over a kilo now I would be wanting to buy worth of silver. Or definitely well over one roll of a coin. So as far as silver is concerned, it's looking pretty bullish as well. And I guess I bought silver from Litecoin today as well. And when we look at this in that currency, oh, it was like five. You needed five Litecoin to buy an ounce of silver. And then 0.04 Litecoin for an ounce, now 0.188. So I guess I can multiply it by 7. And then the premium, it's definitely, a couple of those coins were relatively, one was like, oh, what percentage over spot? It was 10, 12, that was 10, 12% over the rest of the market. I think it worked out to about $30 Canadian, 31, but it was a coin I couldn't pass on. I just keep on thinking, this is what I do. I never really spend more than that for the most part of it, but uh, they were higher for me, higher premium coins. But I never ever spend like it's very rare that I spend 10% more than the price of the going rate of like a silver maple kind of deal. So this is what it looks like against Litecoin on the monthly, on the daily term time frame. We have this level of resistance that silver established, and really it's going to be Litecoin that decides this. I don't really silver. Its up and down moves is really second nature for the most part. If Litecoin has a huge spectacular move up, this is going to go down, and vice versa. If Litecoin goes down, this is going to go up. It's unlikely that silver, although it can do it, could take some control, especially even on the short term, where maybe silver can have like $5 days or 20% moves even. And that would do enough to really take control over this. But until we can make C, uh, it's got to make 3, 4, 5% common days over a period of time for even consider it to be able to control this market. Because since 2019, silver's down significantly for the year. It's down, closed the year at 0.52, so it's lost about two-thirds its value. Against the Canadian dollar, it closed the year at $21.10, so it's up $1.67. That's about 7% ish. Oh, it's not down. So again, that was the case of Litecoin. But as far as how this looks, it's at highs last seen since when? Well, it's gotten above these highs. Oh, this is highs not seen in a while, I guess. We're levels June of 2017. So 2 years plus 2 months. 26-month highs. Almost 25 and a half month highs. On the 3-day chart, well, from this standpoint here, we can see support 21 and a quarter, but this is just this long sideways consolidation point. I firmly believe that gold and silver are so cheap. It's just silver is so much cheaper as it plays out. For the one of the main reasons of the gold buy was because of technical analysis when it made the breakout to the status that it did. It's one I really do take serious that it's going to get to these highs, in this case the 50, and then eventually take them out. This has been a long sustained bear market that maybe the bottom isn't in, but overall it's a matter of time before they come in, and I don't know how much time there's left while you can actually buy gold for under 1500 US, under 2000 Canadian, and silver here at 22 and 3/4 Canadian, or 16 and 3/4 Swiss francs, about 15 and a third euros, over 1800 yen, about 25 Australian dollars, so it's doing a bit better there, and close to all-time highs against the lira, but it's at 93.95 and its highs are over 100, 110. So, I mean, it's closer to its all-time highs than like in Canada and the United States. But 17.15, the United States dollar, it's low. And we look at where is the market, where have we came from, and where do we have the potential to go? Well, where we are again, with all of the currency prices, it's barely over 17. at levels not seen last since last year, which is 2 years later than the Canadian. But again, it's close either way. This price action well below this high, well above this low. And this low was well above its previous low of like $1. And its high, well, this high matched the previous one at 50. So matching high, higher low. Are we in for the bottom? Maybe. The bottom came here a long time ago, back in 2015. Pretty much a retest of it, but it did pierce higher on this from this low in here. These lines represent linear Fibonacci upside. They're like origins of my analysis because I was putting this work in back in like literally back in here, 2010, 2009. I calculated that these were some key levels, breaking $8. So originally, when this line in here, we can see it did not find resistance. And one of the things that happens in technical analysis, if you don't resist or support where key levels are, don't be surprised how fast moves to the next one, which was exactly where this one went to. The support in here, and you know what? They've been doing well. This resistance matched in here. We had little resistance here, fast move to this line. It's been pretty remarkable how these lines are playing through. 75 is the next level post 48. Have I got it written in here? I don't think I do. No, but 75 is the next level that's calculated after this. And it's cheap as far as I'm concerned, just because we're at levels last seen, or sort of, this is January of '08. It hit it. January of '08. Almost all of the stock markets are much higher from that point. But there has been a lot of currency devaluation. Let's take a look at this against, say, something like the national debt. And the calculation is the price of silver divided by the national debt, multiply 100 million. And I'm multiplying it by just a large number just so I can get this to a nice positive number. So instead of, I mean, we're at these lower levels here and much lower than this high. Now, as far as where it came from before, well, 1980, I'll just do the math as it is. I'll take 50 divided by whatever the debt was at that time and multiply 100 million. So within such, I can look for January of 1980 and see that it was 8.63 billion. Wow, that's such a big number. Or 80, we're at 22 trillion, so 836 billion. That would be 1 trillion. Okay, so this is 22 trillion. It's fine. Let's go down to the 2 again. Yeah, so 2 trillion. So yeah, that works out. So that is 863 billion. And the math I come up with is 579.07 for what this index number is, and then multiplying it by 100 million. I did a few extra calculations before I was able to finally figure it out based on these numbers in here. And I gotta think it's 5,793 actually. Because if this high was 331, so I would have missed a zero, I guess. If this high was 3, and then the national debt back then would have been like, what, 15? Basically, 15 trillion, which would have been 20 times higher at that time. Or so. So, Actually, it should be 57,000 back then. So that would be, in my calculation, 57,937 or something around there is where this index, if you were to call it something like that, however you want, it's just mathematical division. It's just unfortunate they don't have the silver data going back to, I mean, 1968 is so easy. At least I see anyway. But as it plays out, we look back in time to 2008, 2007, 2009. That's when the internet, I felt, was changing. For I was a very oblivious to a debt-based monetary level. I was I wasn't cared about any of this financial news of any sort, how monetary system works, how money was created. Although I did care about what the dollar was backed by, but I mean I never really knew, and I guess I really didn't care too much, all things considered. But I guess like everyone else, you go to college and you're taking economics. You would think they're going to teach you what you need to know. No, they're going to teach you what they want you to know, maybe. And just the whole world being oblivious to the system being as it is. But that was changing. In the early days, there was videos like Money as Debt, which was very popular. Zeitgeist Addendum did a very good job in teaching about the monetary system. There were several others as well. And then the likes of Mike Maloney came along in the early stages thereafter that, like 2009 maybe. I don't know when, but as each year goes on, you don't lose that information for each person on the planet. If you knew about it, then you still know about how the Ponzi scheme of the monetary system is enacted. So you can only go so long before a ticking time bomb really goes off. And that's when we see the types of moves like we have in here. Just huge, huge breakout moves. They're to me due to happen again. And maybe it's just ironic that the price came back, adjusted, at least using this measure, to where it came from. But for price action to really retest its 1980 highs, let alone nowadays, even its 2011 highs, its price would have to get well, well, well above it at this stage. Just now to go from, well, if you go look at 340 divided by 77, well, to times that by 10, or 77, that's 770. So it's basically a 5x move, a little about. So you'd almost need silver to go like $85 at current debt levels to be where it was just back in here. And in conclusion, I'm seeing these as, I don't know how long we got until it's just too expensive to buy. Most likely we'll have a while for, I'm hoping that they remain at what I consider cheap prices for a while longer, which is under $100 an ounce American. I know this is a Canadian chart I'm showing of silver now, but about this, close to about the same. But you get the idea of just a small break above resistance in here, the 50. Because as it's breaking out above it, if the price action's at 58, I'm gonna be like this. We're probably going to 75, but that would be like the next level of resistance, and then 120 after that. But I also realize that it's likely to have a large, large, large significant move. So $1,000, $3,000 silver to me is realistic, and conservatively, $400 most certainly is realistic. And if I think that $400 is a conservative level for a good break above 50, that's why I consider $100 and cheaper to be a bargain buy. Now you're not going to go out and pay $100 an ounce now for silver unless you're really going wild on some sort of numismatic market. But just realizing that, okay, at 22.75, maybe you're paying an extra, I don't know, maybe you're paying $26, 27 for some coins because they're really nice or whatever. That's just, to me, not that expensive of a price because they're going to be looking, you look back at it when you're talking about post $300, $400 prices. There's going to be a lot of people wishing, man, I wish I would have bought more. And for me, I don't want to be in that. I mean, I'm not, but I'm like in that camp of I know it's going to go there, so get as much of it as I can now, and uh, and then play on it because during hyperinflation, hyper deflation, hyperinflation as far as prices against the dollar, but hyper deflation when you counter both of those with gains that you can get with gold, silver, and cryptocurrencies. That yeah, you have a 30% gain in or increase in prices, and yet your portfolio doubles or triples. So you sell, say silver goes up to, and even better than that, say silver goes to like say 200 from here, or from 170 US from the 17, it goes up 10 times, and you got prices doubling. Well, that's like 5 times gain on your profit on for deflation, 80% off, because something which normally would have costed say say one, if it doubles to two, you got your portfolio go from 1 to 10. So that's where you would have like uh, an 80% decline in price on that measure. So that's where I'd be taking some silver. And maybe I would sell it for dollars, but that's just a means to an end because I'd be then turning those dollars into something I'd want to buy. I'm like, okay, so let's just turn this amount of silver, let's buy that. Okay, so now I have to sell it for dollars as one of my first steps. Okay, that's done. Now let's go buy this, whatever I'm looking to buy. So, yeah, I do think there's a chance that I could be selling silver and gold, or both, for such. But whatever money happens to be, whether it be dollars, whether it be gold, whether it be some sort of crypto or something that I can't even fathom right now, I realize there'll be a price on it for silver. Silver will have its price. It ain't going anywhere. It's not leaving this planet. And that's why I'm confident. It's like the number, and if I were to rank, like, okay, for the safest investments for a long term, 5 years, 10 years, and I'm gonna make a list. I mean, like it's like gold, and then or second, first it's silver, then it's gold, and then I can't even put something else. Maybe palladium, but what else could I put? Do I want to go individual stocks? No, that's I'm definitely not doing cash. And as much as I like cryptocurrencies, if we're talking 5 or 10 years, if it means your life savings on it and you don't want to stay away from big gambling, then yeah, of course, in real world diversification, that's not what you're doing. But you're myself, I'm looking for what I know can hold its value over time, but most importantly, have a good chance of appreciating and substantial value as it moves forward, let alone just appreciating in value normally because it hasn't been appreciating over time. It's been depreciating in value against different currencies. But during accumulation stages, that's kind of what a lot of people are looking for. And then I've heard so many people, oh, just give me a little bit of time before I can want to keep on buying. And I even heard it back in here, back in like 2012, 2013. And oh, they just want more time. I don't want to go up yet. I want to buy some more. Well, there's been a lot of time and a lot of people getting in new. I've been fortunate, I believe, to be able to learn in 2016 and not have to go through buying at these higher prices and be able to start off the game by buying at $20 Canadian an ounce or 14, 15, $16 American an ounce. It's been to me a much larger advantage to be able to have that happen because when markets are manipulated down and suppressed like this, then it's just normal for it to have these big moves higher. And if it's true that JP Morgan is accumulating all of this silver, and Well, I believe there's a good chance they can control a lot of these prices. There's a good reason why this has been kept down as much as it has, especially if they've been buying in the US dollar. And as I've been showing earlier, how all these other currencies are doing so much, all the gold and silver is doing so much better against all these other currencies because of what the US dollar has done over the last decent amount of time. Because from its lows, it's had a good run. It's noticeably above the 2008 and 2011 lows, but it's also noticeably above these highs, and they're lower than these ones. In fact, the all-time highs that I remember seeing is about 160. You know what? The game of fiat currencies, I think the world's going through a big change. So that's why I'm glad I've been able to accumulate what I have been. But I'm hoping that for myself, that over the next 1, 2 years, that cryptos do overperform the precious metals, and that I'm able to keep flipping and accumulating more. But as I look at it, if that's the case, and we have silver going to $30, $40, and we have gold going to 25 and $3,000, that if Bitcoin and Litecoin and all the other ones do phenomenally well, then they will still go down against the currencies, and that would be like cheaper for me. Okay, so the price of silver is doubled. We'll say it goes to $34 from 17, and if I can get crypto gains of 5, 7, and 10x, then technically it'd be cheaper for me to buy, and I'll be loving it just as much, even if not even more, on so many fronts when that's the case. Because I've been able to accumulate a good amount of extra gold and silver over the last couple of years because of the cryptocurrency gains. And that's what I'm hoping will continue on doing it. And it'll keep on happening because I don't know when the bottle for cryptos are going to stop, if it is. I don't think it's going to happen anytime soon, but I don't expect at all that the value of silver and gold in many generations could ever lose its value. Thank you for tuning in and have yourself a great day. Bye bye.